Boy, that time flies when you're having fun. It's about that time of day again here, folks. It's Tuesday evening. It's July the 9th, 2019. My name is Joseph, by the way. And as always, this is your nightly newsletter. Now, don't forget, guys, I help traders find high-quality, dependable, reliable, usually profitable trade setups using a simple three-step trading strategy that we teach and trade together every morning in our trade room. But my job tonight's a little bit different. I have a very important job tonight, and that is to identify the best levels, the best setups, the best opportunities we see setting up for tomorrow. That's Wednesday's trading session. And tonight, we have a lot to cover in this video tonight. I've got some oil, S&P, Nasdaq, gold, and euro on the docket for tonight's newsletter. I'm going to jump into oil first, though, because that black gold, that Texas tea, it's got a big curveball coming our way right now. We just saw a big spike off the API report. Let's grab that chart, let's dig in, and let's talk about the plan for tomorrow. Now, of course, digging into this oil chart first of all here today, lot to talk about right now on oil. We're going to dig into a lot more details on this as we go into the video. But as you can see on oil right now, we spent most of the time this week inside of a trading range. Anytime we see a range-bound market, we know the plan is what? Buy low, sell high, and avoid the middle. That's a pretty easy strategy for tomorrow. I want to buy low, I want to sell high, and avoid the middle. But here's where things get interesting. This little guy right here, or should I say this big guy right here, this is the API report coming out this afternoon at 4:30 p.m. Eastern Time. What is that? That's a strong bull spike. And anytime we see a strong bull spike, I know there are going to be buyers now trying to go back up and retest that high. We know we're above the range though, and I want to sell up here. So my goal right now is to find an opportunity to sell off of this high back into that range, but I've got to respect that bull spike. And tonight in the video, we're going to talk about one specific type of pattern I'm looking for to short this market back down into that trading range, even as the buyers try to come back in and buy this next pullback. Now, if we can head back down to those lows, I'm looking to buy off of that low, looking to sell off of that high. And of course, we got some news tomorrow too. We'll talk about that in just a moment. In the short term, looking to sell this market right now. I've got one particular pattern I'm looking for right now, and we're going to break that open right in tonight's video. Stay tuned on the oil for more details on that setup. Over on the S&P tonight, S&P, of course, you'll notice is very bullish in the short term, right? But look closely here, and we are right back inside of that range from yesterday. You can see we spent a good amount of time chopping around here inside that range. Now, anytime I see a range on the chart, I know I want to what? I want to buy low, I want to sell high, and I want to avoid that middle. Now, how do I sell high on this? How do I sell back down into that range? Because right now the market's pretty bullish, isn't it? It really is. I'd much rather be a buyer down below that low tomorrow. That's my ideal setup for tomorrow. But I've got the same pattern, the same setup I'm watching on oil to short back in its range is the same setup I'm watching here, right, for the S&P to sell it back into the range. We're going to talk all about buying low, selling high, these specific setups I'm looking for on that tonight. And also, too, we'll talk about, right, if we can get a breakout of this range, right? What if the market keeps going higher? What's the plan as we go higher? I've got some big targets waiting overhead, and we're going to talk about all those details tonight in this video. How about some Nasdaq? Nasdaq jumping on its horse today. A little bit of a shot lower here, of course, at the beginning of the session this morning, but then a very strong move up, right, and a spike and channel going higher. Spike and channel patterns are really powerful patterns. It's a bull market. I want to buy at a support level. I've got key levels of support here. I've got key levels of support here. I'm looking for a pullback right now, and that's a relatively deep pullback, right? So whenever we have the potential for a relatively deep pullback, there are three different types of patterns that I've got to be ready for tomorrow. So if you're a Nasdaq trader looking for that pullback right now, 3 different patterns we're looking for on this. We'll talk more about details on that. And of course, I'm also looking for a possible range up here, right? S&P in a range, oil in a range, right? That Nasdaq might just want to go sideways as well. So I'm going to have a plan tonight for what we're going to do if this market turns sideways with that range tomorrow as well. Stay tuned for more details on the Nasdaq in tonight's video. Over on the gold tonight, gold is a beautiful move higher, as you can see here, 1 and 2 legs up. Into what? Into a trading range. Absolutely. Now, this is not your typical range-bound market. This is what I would call a spike and range, right? We get a nice big strong spike up into that trading range going sideways. Now, anytime of a spike in range, I know I want to be a buyer on this, right? Being a seller right now is not going to be as easy because of that strong spike going higher. I want to buy low, right? Because, of course, this trading range, we've already talked about that briefly here so far. And I've got, again, 3 different patterns I'm looking for here to buy low. So we'll talk about those specific patterns as we dig into the video tonight. But what if the market goes higher, right? What if we go higher? What if we go higher? Do I want to buy up here? It's not a great idea to buy breakouts, right? I mean, after all, look what's happened the last couple times they've tried to go higher. Not a very good strategy to buy a breakout, but at what point up here is it safe to call this another leg higher, right? At what point can I buy that breakout? At what point does a breakout become a successful breakout? And where are my targets overhead? We're going to talk all about how to trade it as it goes higher. We'll also talk about where this market is likely going here for tomorrow on that yellow metal. If you're a gold trader, definitely want to stay tuned on that later on in the video. And of course, over on the euro has been very low volume this week ahead of some big news coming out tomorrow morning, which we'll talk about in just a moment. As you can see, though, we, of course, continue to roll lower here. We continue here to kind of get stuck inside of these ranges. Now, what we're seeing on the euro right now is we have 2 ranges here. We have 1 is the bigger range from yesterday, and 2 is the smaller range. Now, what do ranges tell me to do? They tell me to buy low. They tell me to sell high and avoid that middle. I'm below the range here. If I can get below that range again, I'd love to look for a seller failure or a bear trap, right, to be a buyer down below those lows. That would kill 2 birds with 1 stone, right? Not that I condone that by any means, right? Killing birds with stones. But I do like the idea that it's going to give us a chance to buy below that range, right? Multiply that by 2. We'll talk about the specific entry patterns I want to use on that. And then how do I get short off the high? We'll talk about what we're looking like to sell off of that high, or right, when does it become a full-blown reversal? Because again, we get some big news tomorrow morning, which we'll talk about in a moment, that definitely may send this euro screaming back higher here. So we get a lot to cover here tonight, as you can see. I get a small little range on the euro. I'm trying to pick a bottom right now on this euro. Over on the gold, right, that spike in range, looking to buy that low. Nasdaq waiting for that deep pullback. S&P, of course, that tricky range here. That's going to be a tricky one on the S&P. And crude oil, I'm looking forward to picking some of the pockets of these buyers to sell this puppy back down into that range. Before we jump into all the details here tonight, before we go into all the nitty-gritty details and these specific setups I'm watching for tomorrow, I want to remind you to join our mailing list. You know, just before I publish this video on our YouTube channel, I send an email out to our members of our mailing list, and I want to make sure that you get that email. That way you never miss another great newsletter. It's easy to join the list. Just give me your name and your email address and then hit that subscribe now button, and I'll make sure to send you a welcome email. It's very, very important. Once you join the list, you still have to go in and check your email. I'm going to send you a welcome email with a verification link that you have to verify your inbox inbox. So don't forget, sometimes those emails get stuck in your spam filter. So when you register for the mailing list, make sure you also check your email. If you don't see it in your inbox, check your spam folder. It may be there as well. And that way, right, you'll be added to our list and you'll be the first person to know when this nightly newsletter goes live every evening. And then as always, I'm always asking for your help. I'm always listening, guys. I have a question for you in the comments section below, right? Give me a couple moments of your time and let me know what's the biggest obstacle standing between you and becoming confident and consistently profitable in these markets. You know, I've helped thousands of traders in my teaching and trading career. And of course, I'm always looking to learn new ways to help people like yourself. I want to make this process easier. I want to make this newsletter more effective, and I need your feedback. So give me a couple moments of your time here, just a few minutes of your time. Drop me a comment in the comment section, right? What, in your opinion, you know, everyone's on the same journey, but different spot on that journey. Where you are on your trading journey right now, what's the biggest obstacle standing in your way? Is it software? Is it indicators? Is it technical analysis? How about entry setups, trade management? Maybe it's mindset or psychology. In your opinion, what's the most important thing that I can teach more of on this nightly newsletter? Drop me some comments in the comments section below. That would mean the world to me that you take the time out of your busy schedule. And speaking of taking the time out of your busy schedule, give me a thumbs up on the video tonight here on YouTube if you take an hour of your day and watch this lesson with us. If you tune in every evening on this nightly newsletter, give me a thumbs up on that YouTube video, because I'll tell you, it goes a long way for YouTube to expose this video to other traders who can benefit from this as well. So give me some feedback, right? How can I make this better in the comments section? And then hit that thumbs up button, right, to give me a thumbs from the video to help expose this video, right, to other traders here in the YouTube world. Now, don't forget, if you have any questions, right, you can post them in the comments section, or you can always call that toll-free phone number in the upper right-hand corner. I know this sounds crazy, but when you call that number, I actually answer the phone, answer questions. I love talking to my clients. I realize a lot of people don't answer the phone. I realize a lot of websites don't even have a phone number to call, right? So I want to recommend call that toll-free phone number. Maybe you've got questions about brokers or charting software, or maybe you want to join our free trading classes, right, without being a client, or maybe you want to join our trade room on a free pass. If you have any questions about anything, right, we talk about tonight on this lesson, call that toll-free phone number or use that live support tool in the upper right-hand corner, and I'll be there on the other end of the line to answer all your questions. That way you're not wasting time, right, because of course time is money in the financial markets. All right, let's keep going. You guys know, right? You guys know the deal there. Let's jump into our schedule here for tomorrow. Jumping into the newsletter video for tonight, first thing we'll do here is take a look at the calendar here for tomorrow. Tomorrow, of course, is Wednesday, July the 10th. Tomorrow is ultimately all eyes on the Fed tomorrow. Everyone's watching Jerome Powell at 10 o'clock Eastern time, and of course, they'll be sticking around tomorrow afternoon for the FOMC meeting minutes. Tomorrow is really going to be a day where we're going to have to get in early, kind of thread the needle, so to speak, around the news report that comes out at 10 o'clock. And then, of course, we got the inventory report at 10:30, and we have the FOMC meeting minutes at 2 o'clock Eastern time. Which of these is the most important? For the general markets, it is Jerome Powell at 10 o'clock Eastern time. As we talked about in last night's newsletter, this will be a 2-day testimony on Capitol Hill, right? I believe tomorrow is the House Oversight Committee, and Thursday, I think, is the Finance Committee. But the bottom line is this is a 2-day testimony. Thursday's not going to be nearly as important as tomorrow. Tomorrow at 10 o'clock Eastern time, he will start off with prepared text everybody will know what he's going to say ahead of time. And then after about a half an hour of his prepared text, he'll then take the live Q&A. And the live Q&A, which is usually later in the morning, right? Half an hour, 45 minutes after 10 o'clock, that's usually when things start to heat up, right, in the wake of his testimony tomorrow. So again, tomorrow morning, 10 o'clock Eastern time, that's the big news tomorrow morning. It'll start right at 10 o'clock. He'll have his prepared notes, his prepared remarks from 10 o'clock to 10:30, and then really about 10:30 to about noon or 12:30, right, he'll get the live Q&A from the panel right there on Capitol Hill. Most important thing for us tomorrow is get there early, stay patient around that 10 o'clock to 11 o'clock hour, because in all reality, there's no way to really tell how the markets will respond to what he says in his opening remarks. Remember, the reason why this is an important piece of information tomorrow is because it's been back and forth between whether or not the Fed, right, and Jerome Powell is the leader of the Fed in the U.S., right? He's the chairman of the Fed in the U.S., right, like Draghi, right, in Europe. And of course, Powell tomorrow hopefully is going to give us an idea of whether or not they're going to raise rates or cut rates. So people are really, really tuning in tomorrow morning to see if he will give away any inkling as far as what the plan might be for the Fed as we go into the rest of the month. So that's why the big news tomorrow. That's why we think the euro is sluggish today. That's why gold, right, it's a bit rocky today. Everybody's kind of waiting on, right, that Jerome Powell speech. My best advice would be get to your desk early tomorrow. We'll look for some setups early tomorrow, but then between 10 o'clock and 11 o'clock, you're going to really have to be patient and see what that number, right, see what he says, see how the market responds. We may see a very, very good reaction, or it may be very choppy and sloppy. Then 10:30 tomorrow, we have the petroleum status report. Now, this only applies to all you crude oil traders out there. So Nasdaq, S&P, gold, euro, you guys don't have to worry about the petroleum status report tomorrow, but oil traders, right, if you're an oil trader, tomorrow's Wednesday. Tomorrow's inventory day. Now, tomorrow's probably going to be kind of overshadowed by that Jerome Powell speech, so we may not see that much of a response at that on that inventory report tomorrow at 10:30. But again, we want to be aware between 10 o'clock and 11 o'clock tomorrow, we're going to have that Jerome Powell testimony, and then of course on top of that, we've got that news coming out at 10:30 for crude oil traders. So be careful around there. And of course, later on tomorrow afternoon, there is more. That's why I said tomorrow's kind of one of those days where we've got to kind of thread the needle here, right, back and forth with these news events. Tomorrow afternoon at 2 o'clock Eastern time, that might be the big move of the morning, right? The markets may be relatively quiet and paralyzed, in that 10 o'clock to 11 o'clock hour. And then after lunch, once we get those FOMC meeting minutes, right, again, it's all about Fed tomorrow, we may just see a pretty active afternoon, right? 2:15 to 3:15, 4:15, right? So we may get a couple hours tomorrow afternoon. Usually summertime season, we don't get that great price action afternoons, but hey, tomorrow with news being piled on in the morning, right, we may just see that nice reaction after that FOMC announcement. Obviously, once again, I'm not trading these news events. I'll wait for the reaction, and we'll trade a couple minutes after the news events come out. Tomorrow, though, get there early, stay patient between 10 o'clock and 11 o'clock. And don't forget, guys, we'll go over the entire plan tonight, but we're going to trade the plan together tomorrow at 8 o'clock Eastern time. The strategy we'll talk about tonight is very simple. What's not always so simple, though, is actually applying it to a moving market. And so to make it easier for my clients, we trade the strategy together every morning at 8 o'clock Eastern time, and you can join as a client, right, and register on our website. But for now, though, let's grab some charts and let's see where we want to be looking for those buying and selling opportunities setting up for Wednesday's trading session. I'm going to jump in here first to oil. And as I mentioned oil in the introduction, the most important thing about oil right now is the fact the last 2 days we've pretty much have spent, right, sitting inside of a trading range here. We've had higher lows, we've had lower highs, and then just recently here, right, we see that big blast higher. That big blast higher, as you can see here, completes the measured move, and ultimately that big blast higher, right, was the preview of tomorrow's inventory report. That was the weekly API report every Tuesday, right? Every Tuesday at 4:30 p.m. Eastern Time, right? So every Tuesday at 4:30, you get that API report, right? It's kind of the cousin of the weekly inventory report that we'll see tomorrow morning at 10:30. So that's the reason for that spike higher. So what do we know right now? We know right now the market is mostly range bound. And range bound markets, what do they tell us? They tell us to buy low, they tell us to sell high, and they tell us to avoid that middle. I want to sell this market now, right? I want to sell this thing back down into that trading range, but the problem is I've got this real strong spike higher. So I know I have a strong spike. What does a strong spike tell me? Well, anytime I see a strong move in one direction, I have to expect they're going to try to make a second leg. And I also know the buyers will probably try a couple times to do it. They'll probably try once, they'll probably try twice before they give up and let this market sink back down into that trading range. So ultimately, the two big components on this crude chart are, one, the range, right? I know I have that trading range. That trading range tells me I want to sell up here, back down into that range. I also want to buy back up into the range while staying away from that middle. So here we are up around the highs. I want to sell off these highs, but I have to worry about this big spike up. That spike up tells me we should see another attempt to go higher. And how many tries will those buyers give us? They'll probably give us 2 tries here. So I want to let them try a couple times to buy this. Let's clean up this chart here real quick. And think about it this way, right? Look what happened back here. Go back in time here and look at this one back here, right? Strong move up. And then we see the buyers, right? The buyers try once, the buyers try twice, and then it collapses back down. See how that works, right? Right here again, over here too, right? We go up, the buyers try once, the buyers try twice, and back down in. That's called a nested failure pattern. Anytime I have a market that's overall bullish, but I want to sell it, what I'll do is I'll wait for these buyers to try once, I'll wait for them to try twice, and looking to sell once those buyers, again, have tried twice, right? This is my way of fading the breakouts, right? Trading this as a range, but at the same time, respecting the momentum of that big break higher, okay? Now, what if we don't, right? What if we pull back and we retest the high? Right? If we pull back and retest that high, now I'm looking for really one of 2 scenarios. So we may not get the short, right? For all I know, we may see buyers come in and run this thing back higher again. And in that situation, now we have to treat this a little bit differently, right? Then we have to treat this more like a bullish breakout. And ultimately what you're thinking right now is you're looking for one of 2 scenarios. One scenario would be we see a higher high, right? Let's say, for example, we pull back and we get a higher high, right? We make another run going higher here. If I get another run going higher, now what I'll do is I'm going to mark up those highs. I'm going to bring it down to that low, and this will create a spike in channel, and then I'll look to buy off the low of that channel, right? So if they do hold that move going higher, just simply mark up those 2 highs, bring it down to that low, and then look to buy off of that low, right? And typically the buy pattern we'll look for in that is going to be a failure pattern into a pullback pattern combination, right? And I'll talk more details about these patterns in a moment here, but one's going to be a failure pattern, right? It'll look a lot like this: down, and go, right? Down, and go, right? So imagine now, right, those 2 patterns now up at the low of that channel, just kind of give you a visual on that, right? Or the pullback, right? And the pullbacks, right? That pullback that would happen shortly thereafter there, right? That pullback comes up, pulls back, right, to usually right where that failure triggered before. So again, one scenario would be a move up, pull back, higher high, mark up that high, mark up that low, and looking for that 1, 2 try failure into that pullback setup off of that low. But what if all they do is double top off that high, right? What if they don't make that higher high? What if we double top off that high? If they double top, right? Not higher highs here, but if they double top, now that tells me there's a range. Now, a lot like that spike and channel scenario, I use the 2 tops to find the bottom, right? So that creates my trading range. Now, what do we do with a range? We buy low, we sell high. I have a bull bias at that point. So now I'm looking to buy low. And my favorite way to buy the low of a range is to use that failure pattern. Again, look back here, look back there, right there again, right? Imagine for a moment now, right? We make a run lower. Again, this is after we see the double top. We make that run lower. We see the sellers try to sell that next pullback. We know where their stops are, and we're buying into those stop losses, right? Nice, easy setup, right? And again, it will look just like this, right? We go down, the bears try to sell, right? And we're buying into their stops, right? We're buying the low of that range here, right? Same thing. We're buying the low of that range to run this thing back up to retest those highs. So those are 2 scenarios, right, I'm looking for if the market goes back up, right, and holds. So really, it's the short is the 1 and the 2 and the sell back down, or it's the strong move up, higher high into a spike in channel, buying that low, or, right, it's that strong move up, that double top that creates the range, and now we're looking to buy with that failure pattern down below that low. Now, what if all these are wrong, right? What if it just collapses back down in? Well, if it collapses back down into that range, what you want to think of is you want to think of 2 specific types of scenarios. One would be, does the market go back into the range and then turn sideways? Or does the market just roll? That's kind of the big question mark right now, right? If we go back into that range and we start going sideways now, well, now all I got to do is find that failure pattern down around those lows, right? I've got my buy zone down here. I'm going to wait for the sellers to try to run it lower. I'll get that moving average coming over. I'm looking for the sellers to sell off the moving average, and I'm buying into those stop losses. Okay, so I'm doing here, right? If we go back into that range, that will allow momentum to calm down for a little bit, then wait for those bears to try to run it lower, let them try to sell off the moving average like we've seen a couple times already, and then we'll buy right back into that range again. Remember, range-bound markets, buy low and sell high. Now, what if the market collapses back down? Why is that different, by the way? Momentum, right? Momentum is the big key here. Momentum is really the big reason why that's important information, right? If we settle into that range, that will kind of absorb all that momentum like a dry sponge, right? But if this thing just kind of runs and runs lower here now we have what? We've got bearish momentum. Now, I want to buy low here, but I don't want to buy into a real strong bear move. What's the best way to buy in a relatively bear momentum market? The nested pattern. I wait for the bears to try once, I wait for them to try twice, and I buy up from there. You're right, it's the same pattern I'm looking to sell right now. We go up, big blast higher. I don't want to just sell it, but I do want to sell it. It's above the top of that range. So it's 1, it's 2, let the buyers try twice, then we're selling into those stop losses. Or as we go lower, again, if it just cruises lower here, let the bears try once, try twice, then we buy back up from there, right? Let those bears try to sell it once, let them try to sell it twice. Looking good. Now, we've covered both the buy side and the sell side. You want to learn more? Want to learn all the details of all my 4 favorite patterns? How about all the fundamentals of the three-step trading strategy? Failure patterns, pullback patterns, trap patterns. I have so much more I want to teach you, along with hundreds of examples of real setups, right? I'm just drawing these up in the chart right now of things I'm watching for tomorrow, but I want to give you a lot more of a deeper dive into all of these pattern setups I'm talking about. And to do that, I'm going to put a big link in the upper right-hand corner. I'll also put a big red button right below the video tonight on our blog at Sideways Markets, and that will link you up for our free trading course. Everyone loves the free course because it gives you a deeper dive into everything we talk about on this nightly newsletter. So if you love the newsletter but you want to learn more, definitely grab that free course. It's linked up in the upper right-hand corner. There's a big red button also for it below the video tonight on our blog. And please don't forget, when you register for the free course, I'm going to send you an email. I need you to check your email to verify your email. So make sure, remember, if you don't see that email, check your spam, check your junk, check those promotions folders, because sometimes those emails, they get stuck in your spam filter. All right, let's keep going. Oil is looking good. We know we're waiting for here on oil. How about some S&P? What do we know about the S&P right now? We know that yesterday finished in a range. This morning, we saw that strong move down. The bears tried once, the bears tried twice, and rallied higher. Beautiful example of a nested failure. Now, we run back up, and we go literally back into that trading range again. Right? We sit there now going back and forth inside that range until it looks like those buyers following the lead from crude oil. That's what it looks like. It looks like the buyers here were simply piggybacking right on the oil move from earlier this afternoon, and they jumped higher as well. So we know really two things. One is bullish momentum. The second is a trading range. Okay, first of all, what does the range tell me to do? The range tells me to buy low, it tells me to sell high, and it tells me to avoid the middle, right? I use the size of the range, by the way, to find the buy zones below, right, and the sell zones above. And as I mentioned earlier, I cover a lot of those details, right, inside of our free trading classes, right? So grab that free course in the upper right-hand corner. Okay, so we know we have the range. We know we want to be a buyer down in the buy zone. I want to be a seller up in the sell zone. Okay, that's relatively easy. Now what? We have a bull bias though, right? It's definitely a bullish momentum market. So what's the best pattern? Refresh my memory again, guys. What's the best pattern I should be looking for when I want to sell a bull market? You got it, the nested pattern. I want to be a seller on this, but there's one thing I've got to be careful here, and this is where a little bit more knowledge goes a long way. What do we know about this range? It's a very what? It's very narrow. What's the big concern about a narrow range? Space, right? There's very little space to trade inside of it. Why do we care about space? Because open space is available profit. Right? That's the problem with this range. This range is very, very narrow. There's barely any space inside that range. So what I want to do is I want to find a pattern that will get me short off these highs, but also gets me in as high as I possibly can go so I have as much potential profit as I can. What's the best pattern to avoid selling too low? A trap pattern. So now let's combine that too. Let's combine the nested failure along with the trap entry, right? These are two separate patterns, but I'll combine them together, right? If a nested failure and a trap, right, had their love child, right, it'd be what? It'd be a crown. We go up, we let them try once, we let them try twice, and back down from there. Now this little pattern is a very, very effective pattern in these type of situations. One, I'm trying to go against momentum. Why? Because it's a range, right? I wouldn't recommend going against the trend like this if it wasn't obviously a range-bound scenario. Let's make that very, very clear, right? I'm not in the business of picking tops and picking bottoms. But when I have a range like this, I know those ranges are magnets, right? Because range-bound markets, they scream balance, don't they, right? They scream balance. So I want to sell this market, but it's too bullish to sell. On top of that, there's not a lot of space in here, right? It's a real skinny range, right? It's a very narrow range. There's not enough meat on the bone unless I can get a trap, right? Trap patterns are always my go-to patterns when I'm concerned about the amount of space I have right before I run into a level of support or resistance. In this case, it's running into the opposite side, right, of that trading range. So that's the overall plan here to short, right? I want to let this market try once, let him try twice. Once I get that, again, it's a nested, but because we have limited space up there, right, I want that trap instead. Now, what if we don't get it? Or what if we do get it and we end up back inside that range now? Now what do we do? Well, now the market's bullish. So now I can be relatively aggressive, right? If we think of it this way, if we pull back here now, for example, I can now be relatively aggressive here at buying into a seller failure pattern, right? One of my favorite setups is a failure into a pullback combination, and of course the target is back up to retest that high. So kind of think about how this works, right? We see a pullback. That pullback isn't enough to call it a bear market, right? It's not a bear market at that point. We'll talk about what a bear market looks like in a second here. But that won't be a bear market. That will just be a deep pullback in this overall bullish trend. But it will be enough to make the sellers think this market has reversed. So what do? We wait for the sellers to try to sell off the pullback, right? It'll look a lot like this. Obviously not after that big dramatic move lower, right? But, again, get the pullback, look for those sellers to try to sell off the moving average. Once those sellers sell off the moving average, then we look to buy into their failure and buy the pullback from there. So imagine now, right, that pattern we saw earlier. Again, that one wasn't the easiest because you had such a strong move down. That was a nested instead, but same basic idea, right, if we get this shallow pullback, right, on the S&P 500, right? So what we're looking for is buy the failure, right, and buy the pullback. Okay, so now we've got two pretty good opportunities here. I get to sell with a crown reversal, right, that nested failure with a trap. Then we see a pullback. I've got that failure pattern, right, that failure here into that pullback, right, and then back up we go. Those are the basic idea. Now, one more setup. Keep your eyes on a two-legged pullback. Okay, two-legged pullbacks are very common in ranges. For whatever reason, ranges love to bounce around, right, because they're balanced. What you want to do is you want to draw that trend line, right, coming down overhead and look to go up, over, and use that trend line as that level of support. Okay, we call these two-legged pullbacks or a 2LP, right? Two-legged pullback or a 2LP. That two-legged pullback or that 2LP, the secret to these patterns is you always want to make sure you can see some daylight in between the trend line and the move up and over, right? You'll always hear me say, I want to go up and over, right? Up and over, right? And then pull back. What you don't want to do is try getting that right when it grinds lower. A lot of times it'll grind lower. You want that space between up, over, right, and buy that pullback from there. And again, it's called a two-legged pullback, right? A two-legged pullback. Now, don't forget, right, if we sink back into that range, sit on hands, right? Don't do anything. Wait for that market to go lower, look for that failure, and buy it back up from there. Now, speaking of going higher here, what does a breakout look like? All right, at what point could I successfully call this a breakout market? At this point, all they have to do in my eyes is hold that pullback. If they hold that pullback and run higher at this point, right, I have no problem calling this range busted and will now go looking for buying opportunities on the way back up to, right, that high, right? 29.97, right? And of course that 3006. Right now we get some big milestones waiting overhead on the E-minis. That's where those buyers are trying to go. So if we do get a 1, 2, 3 breakout, what's the plan? The plan is now to mark up that high, bring it down to that low. You'll notice I'll have to adjust this channel, right? This channel is kind of a holding point right now, right? But if we do see this thing now, if it goes up, it already has one strong move, pull back. If it holds and makes that run, mark up that high, buy off of that low, right? This is what I call a 1, 2, 3 breakout into a hidden channel pullback. 1, 2, 3 breakout, right, into a hidden channel pullback. Where's my target? Target, of course, up around that 29.98 and change, and then up around that 3,000 big round number from there. So don't forget, we're buying low, we're selling high, we are respecting momentum, and boy, we talked about a lot of patterns in this section on the S&P. I would encourage you, if you want to see hundreds of examples of those patterns, grab that course link in the upper right-hand corner or hit that big red button right below the video tonight on our trading blog and get that, right, and get that deeper dive on there. You'll love that free trading class. Next up, over on the Nasdaq, what do we know about the Nasdaq? Well, we know for sure the Nasdaq did not have the same problem as the S&P, right? The S&P went below that range and then got stuck inside that range for a lot of today's price action. The Nasdaq doesn't appear to have that problem whatsoever. Nasdaq is clearly hunting for, right? The buyers obviously have control right now on this Nasdaq. The buyers are hunting for that retest of 78.80 and of course that retest of all-time highs at 79.09, right? 79.10, you can call that. So we know these buyers are well in control right now. We know these buyers got two pretty easy to see legs there. And so the first thing comes to mind is we know the buyers have control. I want to buy at support. At the same time, though, you'll notice, right, one thing we didn't see. What's the one thing we didn't see today? We never saw a deep pullback, right? We never did. And so whenever I have a market like this that doesn't pull back during the session, I know there are buyers waiting patiently, right? Buyers are waiting patiently here to buy that pullback right now. And I would imagine any pullback in this market will be seen, right, as a buying opportunity. So we didn't see any pullbacks today, right? They're all very shallow pullbacks. And so without there being a pullback today, right, without there being that pullback today, we know buyers are likely going to be waiting right around the corner here once it does pull back. Another thing I'm thinking here right now on the Nasdaq is anytime we see a market move this far without really any pullbacks, sometimes it's just a short covering rally and it may go sideways here tomorrow. So I'm also watching for a trading range. Right now, let's just say, for example, we get that trading range tomorrow. What would be the plan, again, if the market starts trading sideways? What would be the right way to trade this? We're very, very bullish, right? So I want to be a buyer on this. What are the two ways I could buy this? One is going to be I can buy below that low, right? Failure pattern. Wait for those bears, send it lower. Get those sellers to try to sell off the pullback, and then we're buying into that failure, right? I get a great level of support back there at 78.15. That's a reversal line, by the way, right? 78.15 is a reversal line. So if we do end up going sideways here on this NASDAQ, which I think is definitely likely here tomorrow, I won't be surprised. Let's put it that way. Let's say we go sideways here, right? If we do end up going sideways in my buy zone, right, we know we have potential for a trading range here. So if we do end up going sideways here, just imagine now, right, tomorrow morning we come in, market's going sideways right now. What do you want to do? I want to buy low, right? Way too bullish to sell it. I want to buy low right now. How do I buy low? I can buy with that seller failure, right? Strong move down, moving average comes over. Sellers try to sell off the moving average now, right? We, of course, now are buying into their failure. Okay, that's one easy pattern to keep in mind if we go sideways, right? Or maybe we see a two-legged pullback, right? Something like that. Draw that trend line down, right? Get up and over and use that trend line as support. That is always a tricky part of a range. Like I mentioned earlier, ranges love to throw curveballs at us, and it may give us that trend line coming down overhead. Use that trend line, and remember, you want to see some daylight there between the trend line, right, and that pullback. That's called what? What's it called again? A two-legged pullback, right? Two-legged pullback, because it's one leg, right, and two legs. Now, what else can we do here, right? If the market goes sideways here, we know we want to pull back, right? So if we start going sideways here, we know we want to pull back. What about a break higher, right? If we go sideways in the short term, how can I buy a breakout? See, breakouts are kind of like a four-letter word for futures traders, right? I realize that breakouts work in penny stocks and breakouts will work in Bitcoin, right? These aren't real markets, though. They're not liquid markets. There isn't a buyer for every seller. So in most situations, for example, back here, right? If you try buying a break out of a range, right, or selling a break out of a range, you're going to usually lose money. Right? So trading breakouts is a dangerous game. But again, if we start going sideways here tomorrow, right? Let's just say, for example, we start going sideways here tomorrow, right? And then all of a sudden, right, Powell says something tomorrow morning and market breaks higher here. What are some patterns to look for? Here's two patterns to watch for. Anytime we have a bull market that then breaks out of that range going higher. Again, I'm not going to try to predict that breakout. Okay, it's a fool's game to try predicting those breakouts. What you want here is you want to see one of two scenarios. One would be a strong break up, followed by two tries from the bears. One try, two try, and then buying that trap low. Right? I call this a two-try breakout. Again, we go up. The bears try to sell it once. The bears try to sell it twice. We then, of course, are trying to buy low, trap low, and we're in going long from there. Okay, that's the more aggressive of the breakout patterns, but you'll notice it's not that aggressive. We wait for those bears to try twice, higher highs, right, on the chart, and then we're buying that pullback with that trap low, right? I call that a two-try breakout pattern, right? On my worksheets in the trade room, that's a number 6 pattern, right, on the worksheet. What else can we do here as we go higher? As we go higher, we could also look for a 1, 2, 3 breakout. So imagine now we go up 1, we pull back to the moving average 2, and we break out 3, right? We talked about this briefly earlier, but in those situations, I'm going to mark up that high, mark up that high, and then bring it down to that low, right? And that creates that little hidden channel, and that's where now I want to be a buyer off the low of that hidden channel, right? Does that make sense, right? It's that 1, 2, 3 breakout into that hidden channel pullback. And don't forget, guys, the same thing applies to the downside, right? So if we do pull back here right now, right, that same thing applies down, right? If it goes 1, 2, 3 and runs, I can mark up that low, I can mark up that low, mark up that high, and I'm selling right off of that high, right? I'm selling off of that high. All right, guys? So we're looking good here for the bulls right now, right? We talked about the range. We've talked about price going higher and going lower, right? What if we just pull back right now, right? What if we don't get the range? What if we just pull back here? As you can assume, it's going to be two types of patterns. One, obviously, would be keep an eye out for that two-legged pullback. And you'll notice here I've identified a couple key levels of support, right? That reversal line there at 15.5, that's a key support level. That will work great. Or maybe we drop here, moving average comes over, we get that seller failure off the moving average, right, into that breakout pullback to retest that high, right? That's a failure pattern into a pullback pattern and retesting that high. And again, I'm just drawing on the chart right now, kind of going over all the setups I'm watching for tomorrow. If you want to learn a whole lot more details and see real examples of these setups, make sure you grab that free course I mentioned in the upper right-hand corner. All right, let's keep going. Nasdaq is looking good. How about some gold? Now, gold is kind of similar. We just talked about on that Nasdaq, right? We know we have a bullish market. we also can see this market now going sideways. Now, gold has an excuse because gold obviously has that testimony tomorrow morning, right? Anytime somebody talks about interest rates, like the Fed will do tomorrow at 10 o'clock Eastern time, we know it's going to dramatically affect markets like gold and markets like euro. So with tomorrow being the FOMC, not announcement, but with the Fed chair testifying in front of Congress tomorrow, where they'll be talking about interest rates, they'll be talking about, the stability of the U.S. economy, that will impact gold quite dramatically. So I would expect this range to continue into the short term here. But bottom line, though, is we know we're bullish. We know we're into a range. What does the range tell me? It tells me to buy low, sell high. I use the same type of range, use that range to calculate my buy zones down below. I want to buy nice and low on this, on this gold. And you can see we've really got a bunch of spots down here, right? I get a trend line coming in. I get a reversal line coming in, right? I get my buy zone off that trading range. And you'll learn all about these tools in that free class. Not to worry, right? You'll learn about ranges. You'll learn about trend lines, right, inside that free class. So not to worry about, covering all the details here tonight. That's why I have that free course for you guys to take. But the bottom line, though, is I want to buy a pullback. Right? I know I have my range. I want to see the market pull back. Let's get rid of this text here for us real quickly here. Right? I want to see this thing pull back. I want to see that moving average coming over. Right? Get that moving average coming over. Get those sellers to try to sell into it. That tells me now where their stops are. I can look to buy into those stops with a failure pattern, or I can buy the pullback, right, with the pullback pattern. Two easy setups if we get that pullback, right? Let the bears try once, let the bears try twice, get this puppy going lower, get that moving average coming over, let those sellers try to sell in a bull market. Again, it's not a bear market, so it's not a very reliable sell here for those bears. I'd much rather be a buyer into those stops, buying into stops, and then of course, right, last opportunity there, be buying that pullback as it goes back up, right, into that trading range. So those are two patterns I'm watching for on the pullback here for tomorrow. Again, if it keeps going sideways, you just keep sitting on hands, right? If it keeps going sideways, you just keep sitting on hands. Don't waste your time in the middle of this range. But what if we break out higher here, right? What if we break out higher? What's the plan if we break out higher? Well, boy, if we break out higher, we have a great, potential target up there at 14, right? That 14.099, right? 14.10, let's call it. So we know where these buyers want to go. We just have to get one of those patterns, right? What were they again? One of them was a 2-try breakout, strong move up, 1 try, 2 try, and go, right? Remember that? Let the bears try once, let them try twice. See, again, you don't want to buy a breakout because you can see most breakouts fail. Most breakouts are not going to be successful. So you want to wait for it to go up, see if it can survive the first one, let the bears try once to sell it, let them try a second time to sell it, higher highs in price now. They try once, they try twice, and we're buying now with the appropriate entry signal, which you'll learn all about, right, in our free trading classes, right? Get that signal we mentioned and buying into those stop losses. Or maybe it's the 1, 2, 3 breakout, right? Maybe it's the 1, the 2, the 3, the breakout. I don't care what pattern I get. I just need to see some sort of momentum that gets confirmed going higher here. If I can get the 1, 2, 3 breakout, remember it's 1, 2, pull back to the moving average, 3, break out higher, mark up that high, mark up that high, mark up that low, perfect. And now we're trying to buy, now we're trying to buy right off of that low. What's that called again? It's called a 1, 2, 3 breakout with a hidden channel pullback. All right, we're looking good. So now we know what a breakout looks like here on gold. We know what a reversal looks like, right? 1, 2, 3 reversal. Mark up that low, mark up that low, up around that high. I'm going to draw off the big high, right? Not the smaller high there. And then that tells us now, right, where that, right? That tells us now where that sell will be, right, off of that high. Where's my target? Target's pretty simple. Back down to retest that low at 1387. And again, if there's one market that is probably going to be the most difficult tomorrow, it will probably be gold. And again, with the Fed meeting minutes after 2 o'clock tomorrow afternoon, we might just get a late day move on gold tomorrow. So we'll definitely keep our eyes open on that, but be careful on gold and the euro, right? Because both of these markets are going to be kind of borderline paralyzed, right, by this Fed speak tomorrow morning at 10 o'clock Eastern time. Now, we talked about this euro briefly in the introduction. What do we know about the euro right now? One, we know we're bearish, right? We know we're bearish. Two, we know we have a trading range. And three, we have a smaller trading range. These are really the three big clues that we have. First of all, what does the range tell me to do? It tells me to buy low. It tells me to sell high. We're low right now, right? We are low right now. I want to be a buyer going higher. But here's the problem, right? What's the problem? The problem is I've got a bear momentum. Right? Momentum is bearish right now. It's not a very easy trade to take long, is it? Because we're obviously bearish. Okay? Now, whenever I have a bear market and I want to be a buyer, what's the best pattern? The best pattern is that nested. So we go down, we let them see once, higher high twice, right? And now we try to buy back in. But look what's happened here. That second try for the bears puts us where? Inside the range. No wonder it's being rejected. So we talked about this earlier. What's the best type of pattern to avoid buying into the range or to avoid any level of resistance? Right? For example, I can mark up that low. That's likely now a trend line coming down overhead as well. So we know the buyers are trying to buy right now, but the only setup they're getting right now puts them literally right in the range and right into that falling resistance. What's the best pattern to avoid that problem? A trap pattern, right? So now look for that reversal, look for that crown, right? Get that trap. And looking for that trap going lower. Now, ultimately, there are a couple different scenarios I'm looking for right now. Bottom line is, I know I've got a range right here. I'd like to be a buyer underneath that range because that also puts me buying underneath the big range too. So again, as I mentioned earlier, and I obviously don't condone this, right? But killing two birds with one stone, right? We hit two birds with one stone on this, where we've got right a buy off that low. You're buying off the low of both of those ranges. So that's the idea here on the euro. And again, we got to play it carefully here overnight and tomorrow morning because we do know that we have that Fed speech tomorrow morning at 10 o'clock Eastern time. And euro will tend to be pretty quiet ahead of the Fed speech tomorrow. So just be aware of that. I don't want to force it, but if I can get a nice crown reversal here, I've got the one. I'm looking for the two down below that prior swing. I'm looking for a trap low and back up from there. That will now complete a 1 and a 2, and it will also help me now, right, avoid buying inside the range, right, and avoid buying into that trend line. Now, another potential here is we may not get that trap. It may run lower. If it runs lower, I can still look for that buy, but now again, I've got to wait for that 1, wait for that 2, and then back up from there. All right, guys? So again, looking for that nested with that trap low to avoid buying too high, right? Trap low, that nested with that trap low. Let the bears try once. Let them try twice at a higher price. Get that trap low. That way we're buying as low as we possibly can. We're avoiding buying into the high. We're avoiding buying inside the range. I always remind you guys, the hardest part about ranges is staying outside of the range, right? You don't want to be trading inside of that range, 'cause a lot of times it'll kick you out like it's doing right now. Now, what if the market runs up into that range? If it runs back into the range strategy continues, right? We look to sell high, 1 try, 2 try, sell it back down. We look to buy low, 1 nested, right? Back up. you got to remember we're bearish in this right now, right? So if we end up going back into that range right now and then we up, right, let the buyers sort of buy the pullback. We're selling into those stop losses, right? We're selling into those stop losses. And then as we go lower, right, again, because we're overall bearish still, we look for that 1, that 2, and then back up from there. So really the euro is all about staying patient right now in the short term, right, because of tomorrow's Fed speech tomorrow at 10 o'clock Eastern time, keeping our eyes out, right, for that, keeping our eyes open for that crown reversal, right, that nested with a trap, right, or if we make that run down again, same basic idea, right, same basic idea again to be a buyer off of that low. If it runs back into the range, 1 try for the buyers, 2 try for the buyers, selling it back in. If it goes back into the range, bear move down, same pattern, 1, 2, and up from there for that nested failure pattern. And again, guys, I've talked about this multiple times already tonight, right? I'm drawing out the ideas for tomorrow. You can find hundreds of examples of those, right, of those setups, along with a deep dive into our 3-step strategy by grabbing that link in the upper right-hand corner or that big red button right below the video tonight on our trading blog. And that'll wrap things up, right? We are looking great ahead of tomorrow's Fed speech, right? Tomorrow's kind of Fed day. It's not really Fed day tomorrow, but again, with the FOMC chairman, right, or the Fed chair, Powell, at 10 o'clock, and then, of course, the FOMC minutes at 2 o'clock, tomorrow will be that day of kind of threading that needle, and I'm glad we're ready for anything that we get tomorrow morning. Now, speaking of tomorrow morning, don't forget we trade the strategy together every morning, 8 o'clock Eastern time. We'll be there tomorrow morning with all of our members. We'll have our checklist in hand. We'll know all the rules, all the patterns, and we'll trade the strategy together. If you want to get registered, it's very, very easy. Join as an advanced member. The link is right below me tonight on this video here on the blog and on the website at schooloftrade.com. I'll put all the links in the description, right, of this YouTube video. Join as an advanced member. We've got flexible payment options right now as we hit through this summertime season. And if you have any questions about getting started, don't forget I get a toll-free phone number. We have live support on the right-hand side of the website, and I'm always here to answer all of your questions. Hope you learned a lot tonight. Hope we'll use tomorrow to earn a lot together tomorrow in the trade room. If you don't see you guys tomorrow morning in our trade room, come back and see us again tomorrow night on the Wednesday edition of our nightly newsletter. And as always, my name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.